Morning, everyone. So I started trading quite a little bit late. I wasn't able to get on the charts until 10, so I had to do a couple things before actually looking for trades. And I missed a really nice trade I'm going to talk about. And then I'm also going to continue with my analysis and just reading price action. But first of all, I have to show this off, but I found out a cool way to make you won't be able to hear me, but so I was just testing if you could hear me there, because you shouldn't be able to. I'm able to make things fade in and out between different monitors, so it's pretty cool. But anyways, right now what I'm looking at is I have a bearish bias on the daily chart. You know, we wicked yesterday, failed to go into that big gap, and so if let's just say this Thursday candle was immediately rebalanced with Friday's price action, I would want today to be kind of like the last day where we absolutely go lower. I actually did say one time that when you have an immediate rebalance, the next candle should immediately go lower, if not the next candle, the one after it. And so this is kind of like what I'm going in with. I want a down close candle. I'd like to target Friday's low. We still have Thursday's low, which is housing a lot of liquidity. So looking at the current day, it already seems like we moved a lot on the hourly chart, but on the daily chart, you can see there's still potential for a lot more movement lower. And so I am going to be waiting for maybe a second stage distribution. We have an order block which was formed yesterday. I remember yesterday I was watching this price action, and at the time yesterday I was bullish. So when price was just here, I was bullish, and then when I saw this candle close on hourly, I was talking about around the close to 11 o'clock hour. I was talking about how I am not so bullish anymore, and it seems like the higher time frame wants to create an order block. It took liquidity at these relative equal highs. It does not want to continue going higher. The initial idea was 9:30 would dip lower and then continue to run higher above Thursday's high. And Thursday's high kind of stopped me from looking for any shorts at the high. And then when we formed this candle, I then started to look for turning more to a short bias, where we came back to the order block and continued going lower. We came back to the order block one more time, and this was during London, where we kind of trended higher. So now we've kind of cleaned up that trend, and I'm watching this hourly fair value gap to see if we close beneath it. All right, I'm not, I was looking at this 15-minute fair value gap, which was really nice. I wasn't able to get everything I need to do ready on time for me to start looking for trades. So I was, I don't like to immediately get on the charts and start trading. There's things I do that are non-related to trading and trading related to prepare myself. And so I had to do these things, and I wasn't able to catch this move, but this was really nice. It was a 15-minute bearish fair value gap after taking liquidity. That's important. And then on the 5-minute chart, you get that initial run up to form that gap, and then we quickly run above it, creating that turtle soup scenario. And then you have your 1-minute entry. Let me just change this. So you go to the 1-minute chart, or you can go to any chart underneath. Then you have an inverse fair value gap, close, you come back into the inverse fair value gap, and you continue going lower. And it's ran for almost 100 points, back to that weekly mitigation block, a bullish mitigation block. Total about 120 point run from the turtle soup. So that weekly level is this candle right here, obviously providing a little bit of support. So I think we could start to accumulate here off that level, and potentially, I don't know if we're going to come back and rebalance this entire hourly fair value gap at 10 o'clock, but I'm wanting to see if we're going to close beneath that and then just kind of maybe chop around. And I want to see a 5-minute short-term high. So if I see a 5-minute short-term high get hit, I'm going to go and look to trade. If not, then I am not going to do anything. So until I see that, I am going to just remain on that 5-minute chart, and I'm gonna mute, and I'm going to come back if I see that get hit. Now this gap is something I feel more comfortable taking because it's after a little bit of consolidation. And we don't have that 15-minute PD array yet, so I wouldn't be looking to do anything until we have a 15-minute PD array. Now, yeah, even with this one, I feel like it's better to wait until the afternoon. So what I'm gonna do is I'm gonna end the recording. I probably will cut out everything here because I mean nothing really happened that I talked about. Well, you know, there was no 15-minute PD array with a break of 5-minute short-term high like there was up here, and so therefore I'm probably going to cut and then record again if something happens. Alright, hello everyone. So I just wanted to, this morning was very, very short, so to add to it, I wanted to just do a quick summary, not of the whole day, but just pretty much whole day. What I want to talk about is the daily chart, this immediate rebalance. And so I'll take you back to Friday, last Friday, where I saw price drew up and immediately rebalanced this Thursday candle. And so I said if this is immediate rebalance, we should see very quick price action lower, and we shouldn't trade into that gap. So that's what I wrote here. I'm questioning whether we get an immediate rebalance or not today and not trade into the July 24 bearish fair value gap. In this case, I would be very bearish for the next coming days. Right. Monday, however, when I got up and I looked at price, this is how it looked like. And so I assumed that because we were bullish and we were going above new previous day highs and we were very close to Thursday's high, I assumed that maybe we would trade up into this and we wouldn't continue to go lower. Right, so you saw me on Monday try and frame Thursday's high, and I missed a short at the high of the day because we were in close proximity to buy side liquidity at Thursday's high, and I didn't want to look for shorts until that buy side liquidity was hit. Alright, so now going to Monday. Let me just quickly, and I'm going through like what I was thinking as this immediate rebalance played out, because I know it's going to happen in the future again. But on Monday, when the daily chart came down and wicked and closed like this, that made me more confident that we would potentially continue seeing lower prices. ICT's exact words are that, and I'll link this in the description, but he said something like, when we have an immediate rebalance, the next candle should go lower quickly. If not the next candle, the candle after it, or else it's going to reverse, right? So if it starts to trade back into this gap and it's not immediately going lower, it's going to reverse. Now, maybe it could have wicked up into the gap and then quickly continue to go lower, but the point is that really we want this to be a breakaway gap and the majority of it to be left open, right? So we don't really want to see it at all trade into that gap. But more importantly, I wanted today, Tuesday, to be the day that goes lower. It had to be today. If not today, it was probably going to reverse. And so now for FOMC, NFP, and Thursday, overall, I have a bearish bias. I want them to, after those 3 days, to close lower from tonight's open for Wednesday to Friday's close. I want it to be lower and to continue expanding towards that sell side liquidity at the end of the month, potentially retrace at the end of the month to start another delivery lower in August. Alright, so there was a market maker sell model today. This is Monday, which I'll talk about. This is where I missed that trade at the high because I wasn't paying attention to any shorts. I didn't have that in mind. I was looking at Thursday's high, which is at the red line there, or just above the red line there, and and then once we started to go lower and we're forming that hourly bearish order block, right? This is when I started to turn to shorts, and you saw me how I didn't show any of these trades, but these are all trades I had taken on my Apex account. But anyways, for Tuesday, so I had gotten up this morning and I had seen that back in my journal how price was starting to kind of go lower. This is when I was doing my pre-market analysis at 10:11. So you see, it's usually around 9 that I do my pre-market analysis, but I did at 10:11 because again I woke up a little late. For those wondering what happened, there was a cricket by my window, and I have a small window at the top of my room, and there was a cricket right outside, and so it was really pissing me off, and I put a bunch of pillows and covers in front of the window, and it completely like blocked the sound, but I was able to sleep. However, usually the birds and the sunlight wake me up, and I didn't think of that. I didn't wake up. So what woke me up was I was sort of awake, and it was really dark in my room. So I thought it was earlier, and then I heard a phone call, and I'm like, wait a minute. And I've been woken up by those phone calls before. We have a home line, and whenever I get woken up by home line, I know I slept in, because no one calls at like 7 a.m. But anyways, yeah, so today obviously closed lower beneath Thursday's low and retraced after hitting Thursday's low. That's normal. There's lots of liquidity, and we could see tomorrow continue to expand lower. And tomorrow's FOMC, so we could see a big expansion lower. That's what I'd like to see for tomorrow. And price return once more to the bearish order block. I didn't write two. And this is in the morning when you see that when I woke up and I saw that London trend higher, I knew right away that we would likely see a run up to the bearish order block. Right? This is a trend. There's liquidity at that trend. Midnight's open all the way down here. We're only really looking for shorts above midnight open in a premium. If you go from the high there that took buy side liquidity, and then the low there, this is a dealing range, and we're in a premium. And so I'm looking to go short. And it went down very rapidly, but right at this gap here is when I got up. Or not that gap, the long wick there that was left in that 15-minute candle. Not when I got up, but when I was ready to take a trade, and I was doing my analysis. It's about, I think, at the 10 o'clock hour when I started to do my analysis. But I didn't want to immediately, do my analysis, and then as I'm trading, I want to do my analysis, then I went ahead and answered some messages and emails, and finally, when I was ready, I said, okay, I'm going to sit down and I'm going to start looking for trades. Unfortunately, the trade wasn't there and I missed it, but it's fine because this happens every day, every week, and it never stops. So that's the 5-minute short-term high. Another case of an immediate rebalance without trading that breakaway gap there. But very quickly did it go lower. Didn't really give me a chance to get in. And left without me. But this is a trade that I 100% would have taken. Like, I guarantee you. When I got up and I saw on that candle, I saw this 15-minute fair value gap, and I wanted to see it trade in there and then look for a short from that area. Right? I wanted to see a 5-minute short-term high get hit, and then a 1-minute bearish fair value gap or inverse fair value gap or whatever order block, or just a turtle soup, the 5-minute short-term high. I would have done one of those entries, and I would have made at least 40 points today. But it's okay. I didn't get up on time, and I was responsible at least, and it's a little bit bothering, but it's fine because it's gonna happen over and over again. Anyways, that's it for today. Thank you very much, and hopefully this was insightful. Have a good day.